Okay, let's be real. You work hard for your money. You put it aside, you save it. But what if I told you that just saving your money is actually making you poorer every single day? It sounds completely backward, I know, but it's the truth. And today, we're going to break down why investing isn't just some good idea. It's pretty much the only real way to build serious, lasting wealth. So first step, we're going to meet the villain of our story, the silent thief called inflation. Then we'll pull back the curtain on the hero, the stock market, which is this powerful engine fueled by the absolute magic of compounding. After that, we'll talk about the one superpower you absolutely have to master, and that's patience. And finally, we'll wrap it all up with a clear, strategic game plan for your financial future. All right, let's dive right into the big problem, this invisible force that is constantly quietly working against every dollar you've ever saved. Welcome to Section 1, the silent thief. Just think about that for a second. The cash you have tucked away, the money sitting safely in your bank account, is it actually losing its power? The hard truth is, yeah, it is. Every single day, its ability to buy things just shrinks. And that, right there, is the central problem that every single one of us needs to solve. Now, to really wrap our heads around this, we have to talk about one super important idea: real return. Forget whatever simple percentage your bank statement shows you. It's like this. If your savings grew by, say, 2%, but the price of everything around you went up by 3%, you've actually gone backward. You've lost ground. So real return is what's left after inflation has taken its bite. It's the only number that actually tells you if you're getting richer in terms of what you can buy. And that brings us to the great paradox of holding cash. We think of it as the safest option, right? It's stable, it's locked away. But when you factor in inflation, safe actually means a guaranteed loss. It's like having a slow, steady leak in your financial boat. You might not notice it day to day, but trust me, over time, you're sinking. So, if holding on to cash is a losing game, where do we turn? Well, that brings us right to Section 2, where we introduce the solution, the incredible wealth-building engine we call the stock market. So, why is the market so darn effective? Well, it all stands on three incredibly powerful pillars. First, it has a long, proven history of absolutely crushing inflation. Second, it unleashes this almost magical force called compounding. And third, it offers liquidity, which is really just a fancy way of saying you can actually get your money out pretty easily when you need it. Let's break those down. Just let this number sink in for a minute. 7.31%. That is the average real return the U.S. stock market has delivered every single year for a century, and that's after you account for inflation. Think about that. Through wars, recessions, crazy bubbles, it has consistently grown our actual buying power. This isn't just some lucky streak, this is the engine of wealth creation doing its job. And, when you actually see it on a chart, the difference is just staggering. I mean, look at stocks in this race against inflation. They are the undisputed champion. Real estate, yeah, it does okay, but it's a distant second. And cash and bonds, they're just left in the dust, often struggling just to break even, if they're lucky. Okay, let's put these numbers side by side. Stocks give you that powerful 7.3% real growth, and you can sell them any business day. Now, real estate might give you some growth, but it is incredibly illiquid. I mean, you can't just sell your bathroom when you need a little cash, right? So here's the bottom line. Stocks offer by far the best combination of real growth and access to your money. This all leads us to the secret ingredient, the fuel that makes this whole engine run. Section 3 is all about your greatest ally in this whole journey, compounding. This is where we see how time itself becomes your most powerful financial tool. The idea of compounding is so simple, it's almost beautiful. It's your money making money, and then that money starts making its own money. The classic way to think about it is a small snowball rolling down a very, very long hill. At first, it's slow, but pretty soon, it's not just growing steadily, it's growing exponentially. It's picking up speed and size like crazy. And here's a little pro tip. If you want to make that snowball grow even faster, a huge chunk of the market's total return, we're talking about 30%, actually comes from dividends. When you automatically reinvest those dividends, you're basically taking a piece of your profit and immediately putting it back to work. It is literally like pouring gasoline on the fire of compounding. Want to see the raw power of time in action? Just look at this. If you invest a single $1,000 at age 20 and just let it compound, it could grow to over $29,000 in today's money. But if you wait until you're 40 to invest that same $1,000, it only grows to about $7,600. The cost of waiting isn't just a few bucks, it's tens of thousands of dollars of lost wealth. It's staggering. And this brings us to a timeless piece of wisdom from the man himself, Warren Buffett. The incredible mathematical power of compounding, it only works for those who have the right mindset, which actually leads us perfectly into our next section. So that brings us to section 4. We've talked about the math, we've talked about the why, now let's talk about the mindset. This isn't about hot stock tips or trying to read complex charts. It's about mastering one simple but incredibly powerful superpower: patience. Okay, so here it is, the absolute golden rule of investing. I want you to burn this into your brain. Your goal is time in the market, not timing the market. Trying to jump in at the perfect moment and jump out before a crash is a fool's errand. Seriously. History shows us that despite all the scary headlines and the drama, the market actually goes up nearly 8 out of every 10 years. The odds are massively stacked in your favor, but only if you stay in the game. So how exactly should you stay invested? Well, John Bogle, the legendary founder of Vanguard, gave us the perfect analogy. He said, stop trying to find the needle in the haystack. Stop trying to pick that one magical winning stock. It's exhausting, it's risky, and most people fail. Instead, he said, just buy the whole haystack. This whole buy the haystack idea boils down to the 3 beautifully simple steps. First, buy the whole market using low-cost index funds. It's that simple. Second, be absolutely ruthless about keeping your costs low. Fees are like a cancer on your returns. And third, and this is the hardest but most important step, stay the course. You need to learn to practice what's called disciplined inaction, especially when everyone else around you is panicking. And you know what makes staying the course a whole lot easier? Building a solid financial fortress around yourself. That means diversifying beyond just US stocks. You got to think globally, maybe add some bonds to smooth out the ride. But most importantly, it means having a cash emergency fund, a liquidity buffer. That cash is what allows you to ride out the inevitable storms without being forced to sell your investments at the absolute worst possible time. Okay, we've covered a ton of ground. Now let's bring it all home in our final section, section 5, your strategic mandate. This is your actionable roadmap, the what to do now. Now let's be realistic for a second. A lot of experts think that future returns might be a little lower than that big historical average. Maybe somewhere in the 4 to 5% range. But here's why that doesn't change a single thing. A potential 4% real return is still infinitely better than the guaranteed negative return you get from holding cash in a savings account. The fundamental strategy doesn't change. It's still the only game in town. So here it is, your 4-step roadmap to building wealth. Number 1, start now. Prioritize your time in the market. Number 2, be efficient. Use low-cost, diversified funds to keep more of your money working for you. Number 3, protect your growth from taxes. Use accounts like Roth IRAs to shield your money. And number 4, master the art of doing nothing. Embrace that disciplined inaction and have the patience to let your strategy work for you. And that really brings us to the final and most important question. We've established that the stock market is your wealth-building engine and compounding is the fuel. But the key that actually starts it all is time. It's your most valuable and completely non-renewable asset. So the only question that really matters is this: are you investing it?